Sole trader versus limited company, which one is going to save you the most tax depending on how much you earn? So before the last budget, it was more tax efficient for you to operate as a limited company when you started extracting about £30,000 or £40,000 out of your business each year. However, due to recent increases in dividend tax, this has now changed, but there are still a few ways that you can beat HMRC. Now, from strictly a profit extraction standpoint, there is next to no difference in the tax savings between operating as a limited company until you get to just over about £150,000 of personal income. However, I still think you can beat HMRC by registering your business as a limited company when your income starts to exceed more than £50,000 for the following 3 reasons. First up, there's timing of earnings. When you're operating as a limited company, you can choose when you declare your income from a personal perspective, depending on when you pull your money out of a limited company. If you're operating as a sole trader, you have to declare the money on your personal self-assessment in the year in which it was earned, which gives you less flexibility when it comes to tax planning. Number 2, by registering your sole trader as a limited company, you are able to avoid HMRC's new making tax digital rules, which will mean you won't have to file the extra 4 tax submissions that HMRC will require you to do every single year. And third, operating as a limited company helps you to reduce risk. It stops you personally being exposed to being sued, going into liquidation from a personal perspective, okay? If something goes wrong in your business, they come after your business, but they can't come after you because you are deemed a separate legal entity from your limited company. So there are 3 reasons why I still think it's best to go limited instead of as a sole trader.